Okay, let's talk about why last week felt a little slow. Last week in real estate, honestly, it was good. Monday, Tuesday, Wednesday, everything was rocking and rolling. And then as Wednesday went on, it started to slow down. Thursday seemed dead. Friday, nobody's calling you. What's going on? Well, a lot of people, they're focused on the weekend. Some people went ahead and started their spring break on Friday. Some people have religious things going on. They're preparing. They call this Good Friday, and they're getting ready for their big Easter weekend. So activity slowed down a bit, showings, applications, decisions, all of it. But here's what's interesting. The data coming out right now doesn't really agree with itself. On one hand, job openings dropped to 6.9 million, and hiring is at the lowest level in almost 6 years. That's a sluggish labor market. But at the same time, consumer confidence actually improved a little in March. Even though people are still uneasy about jobs and inflation, then you look at spending. Retail sales had their biggest jump in 7 months after 3 months of declines. Now that's looking back at January. We get all of these reports a little bit at different stages. So the economy might be holding up. Now let's bring that into housing. Home prices are still rising, about 1.6% year over year. Affordability, though, has actually improved for 8 straight months and is now at its lowest level since 2022. But then rates ticked up again last week, driven by inflation fears tied to global conflict in Iran. The mortgage applications dropped over 10% this past week. So which is it, strong or slowing? The answer is it's both. And you can feel it right here locally in Hickory. Homes under 350, they're still moving. They're still active. Homes above 600, they definitely have gotten sluggish. They've slowed down. It really comes down to income levels, tax brackets, and honestly, how much uncertainty people are willing to tolerate right now. Because with everything going on globally, there's just a bit of hesitation. And people who are at those higher income levels, those higher buying price points, they don't have to rush. They don't have to make a decision. So their attitude is, let's just wait a little bit and see what happens. So we're not in a crash, but we're not in a boom either. It's just kind of a pause. When you combine that with a week where people are a little focused on things like a big holiday weekend or a religious weekend, it makes the whole market feel a little bit different. That's what we saw this week. So don't worry. I think things will get really back to normal next week, and I think we're getting ready to have a good summer. I want you to reach out to me if you're ready to buy your first home. You're looking to think, how can I build my investment portfolio? Listen, we're getting ready to have one of the best times of the year. It's really, really good for investors when the economy starts to crash a little bit, especially when housing prices start to go down a little bit. So be ready. Let's get you ready to build your investment portfolio as soon as that stuff happens. Reach out to me about DSCR loans or bank statement loans or bridge loans or whatever we can do to help you jump into that fix and flip market. Whatever it is, I'm here to help you with all of those challenging non-conventional mortgages, but I'm also your perfect connection for those great FHA, VA, USDA, and regular conventional mortgages. I'm here to help you buy your first home, build your investment portfolio so that someday you can be benefiting others as you help them along the real estate journey from your retirement vacation home, right? Reach out anytime. talktojosh.net. Look forward to helping you.